All right. Got to call the meeting to order. Motion to approve the agenda.
I move to approve the agenda as posted.
Second?
Now, all in favor?
Aye.
Aye.
We don't have any action items, and we're on to number 4 already, informational items. I guess Sally, we'll start with you.
Good morning,
Good morning.
everybody. We're here to discuss the annual audit for the year ended December 31st, 2023. Ms. Jennifer Files and Mr. Brian Newland are here from Yount, Hyde and Barber. That's who performed our audit. So they'll review the results of the audit with the committee. And then as part of the audit, they're going to go over our annual comprehensive financial report. So that was presented to the Finance Committee last week, and the entire board will see it in 2 weeks when we have our board meeting. So with that, Jennifer.
Thank you all for having us. We're happy to be here. Thank you to Sally and Donna and Brian and all of the many, many people that helped us in the audit process. We are complete. It was a very successful process. So what I have brought for you today, we'll go through the audit results. I'd like to also talk a little bit about your single audit package, since that compliance audit was also conducted this year. So you can see that report, and we're happy to answer any questions that you have. So the overview of the audit as a whole, we did begin our field work in March. As I've mentioned before, we start the process earlier and earlier every year. We'd like to do a lot of preliminary work and risk assessment pieces. We start that in January, sometimes in December each year. But the actual field work is conducted for 2 weeks in the latter part of March. We have issued an unmodified clean opinion on the financial statements of Loudon Water for the calendar year 2023. The other reports that we will issue or have issued at this point are our report on internal control over financial reporting and compliance. You'll see that as we get into our the CFA, the Schedule of Federal Awards. I'll go through that letter there. We have read through your ACFR, the Comprehensive Financial Report. I've probably read it about 9 times now. It's a wonderful document. I'm dreaming about it. But
That's good.
it's a great document. They did a wonderful job on it. I do anticipate that you also receive the Certificate of Excellence in Financial Reporting again for it. We have gone through and reviewed it with the GFOA's checklist and their program to just further ensure, I think your 38th year, 30 some years of receiving that award. So I don't see any reason that you wouldn't receive it again. We also do testing of compliance with the APA specifications for the audits of authorities, boards, and commissions. These are special tests that the APA releases for deposits and investments, for things like the contributions and the census data that go related to the VRS funding. So all of that testing came back clean as well. As part of our service to Loudon Water, we do incorporate Brian Newland and his team as part of our risk advisory team within YHB to look at general IT controls, some user access, and different pieces of IT related matters, because at this point, nothing really can be completed from a financial reporting perspective without hitting some IT system. So we incorporate their assistance in the process just to help us make sure that we're seeing everything, not just through the paper trail, but also through the systems. And he'll give you some more of that information as we get into, they had one comment or recommendation that they put forth to management as part of their process, part of the process this year. Okay, so going into our required communications, this is our piece, our documentation for you to go through so that you have a standard, any governmental board that you sit on or nonprofit board that you sit on, you're going to get very consistent information so that the nature of the data that you receive is consistent. The first page goes through some of the accounting policies and practices, adoption this year. The main GASB standard that Loudon Water adopted was GASB 96 on the subscription-based IT arrangements. We have no findings or issues with that implementation. It was done very well. A labor of love, I'm sure, between IT.
Donna's labor of love.
On here on page 4, 5, and into page 6, this is a little bit different presentation wise than what you've received in the past. These are the accounting estimates. This is not a change in Loudon Water standards or GASB standards, but more so a change in auditor standards, is for us to give you more information about the estimates. So you'll see in each estimate, the estimates are unchanged from what you've seen in the past, but you have more information disclosed here. The actual accounting policy itself, management's estimation process, and then our basis for conclusion for the reasonableness of the estimate. So you'll see that unbilled accounts receivable, the pension and OPEB, depreciation expense, moving on to page 5. Big picture, we have no concerns or issues with management's estimates that are in the financial report. The unbilled receivable, just as it's always been because of the timing of the audit process, they have real-time billings from January 1 through end of March to base that unbilled receivable estimate at 12/31 on. So even though it is truly an estimate, it is based on actual billed numbers for the majority of the calculation.
It's billable, unbilled, basically.
It's, yes.
Okay.
Yeah. If we did your audit the first 2 weeks of January or the second 2 weeks of January, it would truly be more of an estimate and would need to be done on prior year information or trend information. But because the audit is completed the last 2 weeks of March, I think usually 12 of the 13, and even we extend that period to make sure everything's completed. But the 13 cycles have been billed by the time the opinion is issued.
Why are these in here again? I'm confused. Why are they in this report?
So these, it is important from oversight's perspective and board oversight committee's perspective to know that estimates exist within the financial report. I think it's important for the board to know what those estimates are. Our accounting audit standards require us to communicate those to you, and this year require us to give these 3 components of those estimates for more information. In the past, the standard was we had to disclose that there were estimates and what those estimates were. So it was more of a paragraph saying you have estimates in your financial report and they would be A, B, and C. This gives a little bit more information about how management crafts their estimate, their process for developing their estimate, and that we do review it. We've always reviewed it. Our testing hasn't changed. We do review the estimates and their process to make sure that it's sound, that it's vetted, that it's reasonable, and each of these are.
Okay.
But this is just more information for you as the oversight committee to know that there are significant estimates and how they're
So
completed.
we're on page 5.
4 and
So
5,
the
yeah.
Top of that, the top box is about pension and post-employment.
Yes, can
Yeah.
you scroll a little bit up?
And that's really important. And this format I've seen with another board that I'm on, they're using the same format. It gives more detail. The second question, and that wasn't a question, it was observation. Second question is about today, 10,000 for anything greater than 10,000, 10,001 and higher seems low for that. Do you have an opinion on that?
Yes, I do. For the size and the complexity of Loudon Water, my personal opinion is that it's probably low, that Loudon may wish to consider increasing that. I work with governmentals and nonprofits of all sizes, and a lot of organizations have increased that threshold significantly over the last 5 years. Things have become more expensive. Some things are more replaceable than they were previously. Things that lasted longer in the past are more disposable now. So I think 10,000, I mean, it's management's decision as to what they think that threshold is. But my personal opinion is it's probably a little low and maybe could use evaluation of it. Should it be higher?
We can't even buy a generator for $10,000.
So it will also, this impacts the time and effort that management and finance puts into maintaining those records as well. So the depreciation is calculated internally. So the fewer items that you have on your depreciation listing, the fewer items that are going to be tracked and captured and then disposed of in time. So it, in some ways, it will lessen the load of the finance team as well.
All of our vehicles, all of that, is above the 10,000 threshold anyway.
Yes.
What do you think the accounting estimates in these areas are reasonable?
I do. Yes, yes, sir, absolutely. Even the pension and OPEB, those amounts are also significant to the financial statements. But they are based on the actuarial evaluations. It is not management making estimates, internal estimates based on numbers or calculations. Again, through the APA testing, we test the census data that comes from payroll and HR that goes into the VRS to make sure that the information got there, was complete and accurate. The VRS hires actuaries, and actuaries are hired from Loud and Water to evaluate and estimate what the future possible claims are, these are long-term estimates. You have employees that you're looking at, if they're 20, 25 years old. There are assumptions and estimates that go into that calculation of your turnover rates, how much their raises will be over that period of time, what for the OPEB, what the cost of healthcare changes will be over a significant long period of time. So there's a lot of things that go into it, which makes it an estimate. There's no way that anyone has a crystal ball to know what those actual liabilities will be over the future of the next 40 years. But the numbers, the liabilities that are recorded in Loud and Water's ACFR are based on those actuarial studies and valuations. And we've looked through all of those. They have used standard protocol in their valuation analysis and their results. All of the actuaries that participate in the different liabilities and the calculations are reputable valuators. We consider that as well, their skills and expertise in the industry. So I have no concerns over their estimation processes.
Is that an annual review of those estimates? I mean, not from your standpoint, from the on-water standpoint, is that how often do they update their estimates?
They, depending on the size, some of them are annual, some of them are every 2 years.
Okay.
And I don't remember.
Ours are every 2 years.
Every 2 years.
Mhm.
Okay. But we do look at those reports. They do a roll forward. So they'll do the calculation and they'll have the roll forward for the next year. And we do obtain those every year and look through them.
Yeah, it's very important. We appreciate the reporting on it.
On the top of page 6, audit adjustments, we also disclose to you the nature, the amount, and I've actually included a report behind this, an attachment, so you can see exactly what the journal entries were through the audit process. We do request the trial balance early in the process so that we can start our risk assessment and planning. And sometimes things are still being adjusted as we're doing that. And I think one of them being the oversizing piece is exactly that management finance was still working through the oversizing reconciliation and completion. So it's listed in here as an adjustment. It was provided to us in the process. We had no findings or issues with it. We audited the entry, we audited the account balance, but it was given to us after the original trial balance was given to us to start the process. But you can see there in that audit adjustment section, from the original trial balance that would have been, probably February-ish timeframe, to the end net income that you see presented on the ACFR, the decrease in those numbers of a decrease in net income of about $25 million. The biggest piece of that being the oversizing reimbursement adjustment. So if you were, and the reason I explain that is if you were given December 31st quarterly financials or month-end financials in January or early February, the net income that you were presented at that point in time would be different than what you see on the 12/31 ACFR. Every organization presents at a different period and timeframe. So I just like not knowing exactly what trial balance or what, financial report you received and when, to make sure that you know that there could be a difference in net income from what you originally saw if it was presented to you in January or early February.
Is this 25 million, is this typical for us, or is this a larger than we normally have and we adjust the net income?
I would say it's larger than normal this year.
Yeah.
Um,
Fast for that part.
What are oversizing reimbursements?
So we work with developers
Okay, so
in,
they are?
yeah, if they build a pipe bigger than what's required specifically for their development.
So the developer on the other side of that, there's enough,
Yeah.
capacity.
And so then we will reimburse them when connections are made. Yeah.
So from an audit perspective, we look at that and test those contracts and agreements through year end, and then any subsequent payments for proper existence.
So we had
And
to pay out
obligations.
24 million than we thought we had.
We paid out less.
We didn't pay out,
We didn't pay out. Okay.
we didn't pay out 24 million.
The other two entries, I'm skipping ahead, but there is a report in there. The first entry was the fair market value adjustments of some of the investments. This was, I think an entry was done and then maybe reversed,
Mhm.
and it didn't need to be reversed. So then that was given to us as they were closing and reconciling.
So that's part of the 24 million.
Yeah, so it's the first entry. Can you scroll a few pages?
down.
Sorry to,
Page
one more
12.
page, two, yep, what, next, there we go. In super small font. The first entry
course.
there is that investment balance.
I can make it bigger on this.
So
That's the 12 million.
that's the 12 million.
Okay.
That was for the investment account. And again, not all investments, just the one piece. I think there was an entry in the reversal and it didn't need to be reversed. And that was the caught by management and the reconciliation process. But again, it was given, we already had the trial balance. So that entry is there. The second entry is the oversizing entry. So you can see it's a lot of different projects, different pieces as they reconcile and close that
Yeah.
account balance. It's getting them all from what they were previously to what they needed to be at 12/31. And
Gotcha.
if you have anything you want to add to your process?
And it's an oversizing reserve, I see. Tree there, third line down.
It is, yeah, we're just adjusting the liability for most of them. We do payouts also, but the majority of these are adjusting the future liability that may have to be paid out.
Oh, okay, okay.
And yeah, we only do it at year end. So we're catching up for the entire prior year.
And then
The
the,
detail,
It is, it is. Thank you for the detail.
yeah.
and then if the third and final entry there is a very small entry compared to everything else. But again, as final closeout was happening, a few accrued expenses that needed to be put into fiscal 23 and accrued for. I think a small item on dental insurance, and then the arbitrage rebate. With the interest rate environment where it is, that calculation, it's done annually. We look at the arbitrage calculations in the report annually, and for so many years with a very low interest rate environment, there was no arbitrage liability that needed to be recorded. But a few of them now with the rising interest rates have a potential liability. So that's recorded as an accrued expense and will be, again, reviewed annually to see what actually may need to be paid.
But we only pay that if we sell the asset. Is that right?
No, the IRS requires you to pay it every 5 years.
Oh, okay.
But we have it reviewed annually so that we can record the liability. So if it's there the 5th year, then we've already reserved money to pay for it.
And then back to page 6, uncorrected misstatements. If there were any items that we identified through the process that were not posted as adjustments, we would disclose those to you here. We have none through the process. So those 3 entries are the 3 items that that adjusted the trial balance, and we had nothing else no other small entries. The departure from auditor's standard report, obviously the auditing opinion is a standard opinion. Because of your required supplementary information, because of the ACFR presentation that has your introductory section, your statistical section, there is a little bit of a departure from the standard report. It's added paragraphs, and this just discloses that information here. And it's because of the ACFR and the additional information that's included in it. The introductory section and the statistical section, we do not issue an opinion on those sections. A lot of the information in the statistical section is information from Loudoun County as a whole, not just information within the walls of Loudoun Water that we have the ability to audit. And that is not uncommon just to Loudoun. That's all organizations that present an ACFR. There's a lot of more demographic information and county statistics in there. So that piece is unaudited.
So this is just a disclaimer kind of.
Yes, yeah. No basis on the opinion of the financial report, but it does let the reader know that that section has not been audited by us. And then the final page of the required communications here go over any disagreements we have with management, of which there were none. If there were, we would have communicated to the members well before now if we had any issues. Consultations that management had with other accountants or on accounting or auditing matters, we are aware of none. If they were of concern to us, we would have reached out to you. Significant issues arising from the audit process, there are none, no difficulties, and no difficult or contentious matters that required consultation outside of our engagement team. So a very clean, successful process from our end. On page 8 and 9, this section is a little more expanded, I believe, than what it was for you in 2022 presentation. Again, more on auditor changes, not Loudoun Water changes, but our responsibilities for independence. Independence is a shared responsibility. We ask that your management team let us know if there are any new joint ventures, disclose board members to make sure that we can maintain our independence with respect to Loudoun Water and the audit process, and give some information about our responsibilities to maintain it. And then your management team's responsibilities to let us know if there's any change in ownership or joint ventures that might possibly impair it so that we can properly vet it. And then on the top of page 9, internal control and compliance matters. We did not identify any material weaknesses or significant deficiencies in the control environment of Loudoun Water for 12/31/23. So from that perspective, very clean process and findings and results. The one item through the course of the compliance audit, which I believe I mentioned when we met previously pre-audit, that it's a different type of audit. It's compliance based, it's very detailed. It's not necessarily account balances, but it's compliance with laws, regulations, grant agreements, funding agreements, and it's very detailed. So often we look at things from a different light for that audit.
But as we said last time we met, you're not auditing necessarily the controls, not doing internal controls or financial statements.
That is correct.
Okay.
So also, just as it is for the financial statement audit, for the compliance audit, we look at and assess internal controls over financial reporting and over compliance to be able to properly plan and perform the audit. But we do not audit the internal control environment of Loudoun Water. That is a separate audit service deliverable that you can do. Brian works more in the public company space than I do, but the SEC work, a lot of those clients, they have audits of internal controls, and opinion is issued on their internal control environment. You are not required to have that level of service as a governmental organization or a nonprofit organization as well. It's an option though. If the board or management would ever like that, it is an option for you. But we do not issue an opinion on the internal control environment.
Would it be considered every once in a while a best practice to do audit internal controls?
It could be. For a lot of organizations, I would not recommend it because of the depth of testing.
Uh-huh.
For the size and complexity of Loudon Water, I think it would be worth exploring or brainstorming. Is it worthwhile? And there are different levels to what could be considered in that process. It could be an internal function. It could be a management function, a team function. It could be an internal audit type function. It could be a completely separate external independent process as well. Because you have no requirement to do so, you have options based on the level that you're
Mhm.
comfortable with.
It's something that's done in conjunction with the annual audit, or is it something that's completely separate?
It
Is it at the
could,
same time, or? does it
because it's
matter?
not required, it could be either.
Either, okay,
Mhm.
something to consider.
So one of the bullet points we have there, we have not issued a full management letter or internal control letter or something, but these two items that Brian and I will talk about are things that we wanted to bring to your attention. We've talked to management about them, but the second bullet point there for the quarterly report, this specifically comes out of the compliance testing. So when we gather all of the grant and funding agreements and we read through them, we look for key components of reporting requirements, funding requirements, any ratios, any expectations that are spelled out in those agreements. In the reporting piece of our testing, we test them to make sure that management complied. Of all of those, for the four different fundings and the quarterly reports, the pass-through money from Loudoun County, part of that agreement does require a quarterly report that is due to them within 15 days of quarter end. 15 days of quarter end comes up very quickly.
It does.
We tested all of them for that agreement. Only one of them was outside of the 15-day window, and it was the one at 12/31. It was submitted on January 22nd. In talking with management in the process, I believe, and I won't speak for you, you can, but I believe their thought was to gather as much of the year-end accruals and the information to get the report as complete and accurate as possible before submitting. But then it was submitted on the 22nd. So we've talked through that process. It's been submitted to the county. I don't think you've received any communication from them or.
No communication that it was late or anything like that. So Loudoun County didn't alert us. And moving forward, Jennifer's correct. We were just holding the report until all the consulting invoices were in, and we won't do that anymore. We'll submit the report even if all the invoices for the quarter aren't in by the 15th. So.
Got it.
Okay. So you will not find this. This was the only one instance of all the testing that we did through the compliance piece that was outside of what was expected or required in the agreements. So we did not include this to be a deficiency in the overall internal control environment. Management knew of the requirement. They knew the timelines. The other quarterly reports were all submitted timely. This was an exception. And it still was done fairly timely. If it would have not been done, or if it would have been done 3 months later, that might have, in our auditor judgment, may have changed the outcome of the reporting and presentation. But given the short window that it was late, the reason for it, and that all the others were done timely, we left it as a communication to the committee and to management to ensure going forward that it's just not repeated. And then I'll turn it over to Brian for a little bit on the IT side and his team's recommendation there on the last bullet point.
Thanks, Jennifer. Yeah, so just to kind of provide some context, there is one comment here around consistency between a policy, a documented policy, and the configuration that we identified within the system. And again, just to give some context, as Jennifer mentioned at the top of the meeting, we have a team of specialists that meet with the IT staff here at Loudon Water, collect evidence, all with the framework of how could a risk within the IT system affect financial reporting and affect our audit procedures. So that's the scope that we look through, and it's a pretty large swath of information that we cover as we go through this process. Just some examples of what we cover is how the IT team assesses risk, the governance over the IT function, the change management process, so how are software updates made to servers, to workstations, and to the actual applications that are in use. We dig into logical security, including passwords, looking at privileged user management, user permission changes, IT general controls, which is generally antivirus and anti-malware endpoint protection, as well as patch management. So making sure that the software updates are applied in a timely manner and that there's some oversight of that. And probably 6 or 7 years ago, that's where we would have stopped. But we've expanded that into disaster recovery and data backups, primarily because of the risk of ransomware, which is just a very significant threat into any environment. So we look at backups and disaster recovery as well as physical security. And I'll also add that just because of the criticality of the infrastructure of a water utility, we, as Jennifer mentioned, we do a lot of work with SEC clients. And so there's a particular set of cybersecurity questions that we perform for our SEC public clients, for which we give opinions on internal controls over financial reporting. We thought that the risk profile and the significance of Loudon Water was enough that we brought in that cybersecurity questionnaire specifically for Loudon Water. It's probably 7 or 8 pages of detailed questions about incident response, about incident response testing. So just a really in-depth questionnaire. So that's supplemental to the requirements that we typically have to do for a governmental utility. So I say all that to say we cover a lot of ground with the information technology aspect. Again, always focusing on how that could affect the financial statement audit. And we had one very low risk finding, and that was the fact that within the LCSA domain, I say that is a specific technical configuration that monitors or that controls the computers and the servers within the business network. So we're not talking about operational controls. This is just the computers that people use when they come in the morning. The configuration for that domain was a password length of 10 characters, which is strong, but we do compare that to what has been approved by policy. And that was a password length of 11 characters. So anytime we see an inconsistency like that, we want to make sure that those two elements are aligned. So that was the only finding. Again, we looked at a number of different domains. This was just focused on the LCSA domain. And this particular finding did not touch the operational aspect of it.
Were you satisfied with the disaster recovery protocols if there was a ransomware attack and kind of what would happen?
Yeah, we do ask very specifically about that. We ask what management does to test that. One of the key controls that we look for there is an air-gapped backup. So taking the backup and then pulling it offline so that the nasty malware can't sort of infiltrate the other aspects of the network. So, while I would certainly pause short of saying everything is going to be fine because there's always a risk.
Right.
Certainly the controls that were there were very much what we would have expected to see, and very strong.
Are employees trained? Are they trained to recognize that and to know what to do and if that happens and who to talk to? And
Yeah, there is a training program,
Okay.
And if I'm not mistaken, and Mike Beardsley, I believe, is in the room, but there's a periodic phishing exercises that employees are subject to.
Yes, we need them.
I'm sure that they love. In fact, I've seen some clients kind of gamify that. So if you reach a certain threshold and correctly identifying phishing, then get awarded or, get some sort of, acknowledgement. So yeah, the training program is in place, which is a very important aspect of cybersecurity risk management.
We get that annually, also refreshers. I think the board even
Yeah,
sees it.
right.
So that's the exact same training we're having annually.
Very
And
good.
When in doubt, click on it, right?
Yeah.
That is not right. For the record.
And as a board, we're very pleased with the joint exercise that IT did and the company did with our sister utilities, water utilities in the area. It's
Yeah.
very smart, very smart.
Yeah.
Okay. Thank you.
Thank you. Beyond that in the presentation, there are a few upcoming GASB pronouncements that have not yet been implemented. These feel a little lighter than they have the last 4 years, so I probably just jinxed it, but I think 2 of these will be effective for 2024, so we'll focus with Sally next on those. I really don't think that 100 or 101 will have little to any impact on your financial reporting or presentation. Your compensated absences, I believe you're already treating them in accordance with this policy, but we will look at it as we go through this year to make sure that anything is done before year end with Sally. And then risk disclosures. This is the most recent standard, has only been out for a few months, and I'm not an expert on it yet, but that'll be the next few months of work is digging into this one and how it will impact the clients going forward. Beyond the journal entries, which we already talked about, we also did include a copy of the representation letter that management signed at the conclusion of the audit process. So everything is dated May, I think, 17th. So the audit is complete.
Years ago.
But we did give you a copy of that letter so you can see what management represented to us in the process. The other thing that I wanted to talk about briefly was just the single audit package, since it is still a little bit newer to Loudon Water. We issue this separately, independent of the ACFR. It's not included. Some organizations will include it in there, but because of the GFOA certificate program, your ACFR is released as its own package, and then this report is issued. Is it in that?
It is.
Okay.
Is there other? Oh, no, it's not in.
No, it's
I don't
not.
know that
It
it's
was
in.
attached, though, here.
Which one?
It is. It has this cover page. Nope, maybe the next one.
It's just
That one, single audit reporting package. There you go. Thank you. So page 1 and 2, this report is
There it is.
the auditor's report on internal control over financial reporting and on compliance for government auditing standards. Again, this goes through what the levels of deficiencies of internal control are. The basic control deficiency, significant deficiency, material weakness. Again, we have none that are being issued, no findings, none identified during the process. So this is a clean standard report. And then on the top of page 2, it says report on compliance and other matters. This is again that we look at compliance in general. This is not the schedule of federal award specific funds. This is just the government auditing standards piece of it. We always look at compliance in that, but without the single audit, it would be more of like the APA requirements, the specifications, the VRS census information. It would be that type of compliance, laws and regulations. It doesn't necessarily cover all of the schedule of federal awards piece that the next opinion covers. The second opinion on page 3 and 4, this is our report on compliance for each major federal program. Again, it is a clean opinion. There are no findings or issues noted in it, so it's a clean report. It goes through management's responsibilities for compliance, the auditor's responsibilities for compliance. It is a report, but it is not an opinion. So we've done the testing, but we're not issuing an opinion on the internal control piece. But then when you get onto page 6, the actual numbers, there were 4 programs that included federal funding for Loudon Water for 2023. The first 2 there, the first one being that was the money that was passed through Loudoun County, and then the second one from program 97.047. Those 2 were identified and treated as major programs in our audit process. They went under more scrutiny and more detailed testing than the 2 smaller programs that followed them. We do test all of them in some fashion or capacity, but the top 2, because of the size and the nature of them, received more of the focus and more direct testing.
Is the FEMA, is that the quarry,
The
120,000?
No, so that one was a separate one for COVID expenses. And so the federal government reimbursed for things like PPE and COVID testing upon return to work. So those expenses were incurred and reimbursed. So that's what that one is. The one above it, the 331,000, that's the quarry reservoir.
Okay.
Yeah. Mhm.
Oh, happy to see we're getting some money for that. Yeah.
Mhm.
So that's a $10 million.
That is the $10 million one.
Okay.
Yes, yes.
So
So we still have,
that for subsequent years coming up.
yes, yes.
So we're gonna be over the threshold.
That is our
number of years.
anticipation,
Okay.
yes.
And this is year number 2.
This is your
and
number
we
2.
had to clean, we had to go 3 clean ones before they reduce the level of inspection.
You have to have 2 clean.
Oh.
So you're taking away my thunder of my next one.
I'm the straight man. I'm the straight man.
I
Sorry.
like it. Set me up perfectly. We'll take this on the road. We'll do this at all presentations. The one piece that has changed or is about to change in this coming year, OMB has not increased the threshold for single audit for a number of years. I think it was last updated in early 2000s, maybe, to the 750,000 threshold. It will be going up to $1 million, but I don't think that will get Loudon out of it. I think you'll be over $1 million because of that continual funding. Now, if you're not, you won't need to have this compliance audit in any one of those years. You still have to comply with all of the agreements and the funding because the funding still exists. You just won't have to go through this process. But that threshold will be going to $1 million and then in the next year.
So if we do less than $1 million though, you don't have to go through the single audit?
You do not have to do this external
But
single
then
audit
the following
process.
year, if you went above it, would you?
You have to
reset-
do it
have to
again.
2 years again?
Yes.
Okay.
Recess to 2 years.
Yeah. So that is a consideration that you may want to consider if you're fluctuating at or near that $1 million mark. Because you're considered a high risk entity when you don't have those 2 successful, clean, timely audits. It's more work on management. We test a lot more when we can't say that you qualify as a low risk auditee. You may wish to go ahead and continue on if you know that you're going to bump back up over $1 million that following year so that you can keep that low risk status and
How
reduce
do you-
testing.
Can you effectively do that though?
We just asked you to do that, right?
Yeah.
No,
you-
don't you have to spend the money?
I mean, there is a cost to the audit.
No,
And
what I mean is if you're,
You're below the
if
million.
you, let's say you realize you're only, so you get 2 years of clean audit, you're in the clear now. Now you're gonna spend 900,000. You're like, oh darn, we wish we'd spent $1 million so that we can stay in the clean audit side. How can you really control that? Like if you wanted to spend another $100,000, you could be over the $1 million.
you don't have to spend it. If you're at 900, you can still conduct this audit and issue the report.
Okay, I got you.
And your number would be
So
900,000.
you stay in that status of being clean, even though you didn't need to file the report, you still,
Yes.
okay, all right,
Yes.
that makes sense.
Yeah, that makes
Then you
sense.
definitely want to do that, right? Don't you think?
That would be for your consideration as an option.
Would that be your
Um,
recommendation?
If you were that close and you really look to the future years that you're going to continue, I would really consider it so that you don't, the level of testing for each compliance component, and we do control testing for these audits and compliance testing for them. The sample sizes are just that much bigger when you are a high risk auditee and not a low risk auditee, that I think it would be worth considering.
Would that
And-
maintain your low risk status, even though you're not, you're below the threshold?
Yeah,
can
even though
maintain
you're
it.
below the threshold, you have to show that you submitted, you had the audit completed
Yep.
and that you submitted it timely to be able to check the box to qualify for low risk. If you skip a year, even though it's
Right.
because you're under the threshold, you can't check that box. And I can't,
Yeah,
the auditor can't have you be a low risk when you're not.
it's penny wise, pound foolish.
So,
And as an organization, we're going to continue to file and pursue grants, so from federal and FEMA and others, so.
yes. And I do encourage organizations, you have to find the balance of, there are requirements and complexities of receiving federal monies and pass-through monies that include federal funds. The balance of you're paying for this audit. Once you hit the threshold, you're paying for the audit. It does go up once you get larger and larger, but until you get to the point where you have a lot of different programs that have different requirements, it's not a dollar for dollar increase. So some organizations seek to maximize what they can get in federal funds because they're already paying for the single audit to begin with. But on the other hand, I do encourage organizations to look at the complexity and the requirements and what they have to do to satisfy the receipt of those funds from a pure business perspective. Sometimes those grant agreements have so much additional work and things tied to them. It may not be worth the extra dollars that you're bringing in,
Hire a grants person.
depending on how much you're getting from it.
We
I
don't
mean,
have a grants writer, do we?
No, we don't. We
Okay.
do all the work internally through other staff. Yeah.
But from what I'm hearing said is that if we did bring in much more grant money, then we would want to maybe consider having that position, or don't even consider bringing in that much. Right?
Well, what I heard, what she said was that we need to be careful which grants we go after with all of the complexity built into and requirements built in. It could cost us more than we receive in the grant.
Plus, we're open to audit from any of these agencies too, if they wanted to
If
pick
they want.
us.
that's correct.
Want to be careful.
Is that what you said?
And I would just like the ARPA money, we didn't go after the ARPA money. That was the county. They proposed that to us, and the FEMA grant was $10 million. That was a hard one to
Pass over.
pass up. And the LEWAP money, which was 16,000, that was to help customers with their bills.
With their
So that
bills.
was
That was the important thing
we
to
need to
do.
help our customers. So we're very diligent in looking at grants and determining which ones are actually worthwhile. We don't just go after everything that's out there because it's not always worth it. Yeah.
And I think that sums it perfectly for me in my attempt to communicate that. I do think your management team, finance team, they evaluate that each opportunity that comes up or that may be available to them. Some organizations don't. They just look at, we already have this audit, we'll take on the next agreement, the next contract, whatever it might be. And sometimes the labor and effort that goes into compliance of the agreement is way more than the money that they ever took in. But I don't have that doubt with your team. I think that they will do their due diligence and review the cost benefit of any potential funds before they just jump into them.
The flip side of that, though, one could argue that there might be opportunities out there. If you're not looking for them, you miss out on, some low hanging fruit that might be out there. So,
Yes,
you know,
because there are some organizations avoid the federal funds completely because they don't want to incur the cost of this compliance audit. And that's their business decision. But you're already into that. You're going to have it. You're going to have it. So if there is something that comes by or becomes available, an opportunity that is worthwhile, it's worth considering because you're already in this marketplace.
Thank you.
Just one more question, so, okay, sure, I got this straight. So we're in a low risk category now. Because
Next
we've
year.
had 2 years, next year yet, we've had 2 years, so we go along the next few years, we continue to do the single audit, we're still at low risk, and then a year in the future, we get a large award that's a couple of $1 million or something, that puts us, you know, would put us in a high risk category had we not been doing single. That doesn't trigger a high risk as long as we've maintained our low risk status by doing the single audit
Yes.
over the years.
For the most part, the successful completion and clean compliance package
Mhm.
will grant you that continued low risk status. What jeopardizes it? One, not having the 2 years of clean, successful, timely completion. Two, if there are significant findings and question costs identified in one of the audits, that would then trigger you back up to a high risk. So if we went through a process and there were a lot of findings, a lot of non-compliance in the
Mhm.
process, then just because you had 2 previous
Doesn't-
clean ones, it doesn't make you don't just keep the low risk status. So that could do it as well. But getting, so third, another piece that could possibly trigger a high risk status or a high risk program is if the federal government or agency deems it to be high risk. And in my career, the only time that I've really seen it and in my practice was during COVID. They identified certain programs of funding that they are saying auditors were telling you this is high risk. So you might still be low risk for all other purposes and testing, but those programs, when they said this is high risk and you have to test it as high risk, we had to test it as high risk. They can continue that process. I think there were a few programs in the past that pre-COVID had done that, but they weren't funds that our governmental clients or nonprofit clients dealt with. But COVID really popped them up, that there was a lot of them that were deemed by the agency to be high risk. Most of those are gone at this point for our clients. So that could trigger more testing beyond just normal low risk. But the thought of just you take in a $15 million grant one year and that's an oddity, it's not the normal course of it, that in and of itself, unless it was deemed high risk by the agency, would not mean that you were just naturally high risk because you took on one big grant. So on page 8 here, this is the actual schedule of findings and question cost. And it is very boring and very beautiful because it's boring. The financial statement section is first, and this outlines for the reader, we had an unmodified clean opinion issued on the financial statements, no material weaknesses or significant deficiencies in internal control over financial reporting. And then no non-compliance that was material to the financial statements. The next section is the federal awards section. So were there any material weaknesses or significant deficiencies identified relating to the internal control, the major programs that we tested? And those are all no and none. The type of opinion that we issued on compliance is unmodified clean as well. If there were any findings that were required to be disclosed, this would be yes, and then they would be disclosed further down, but we have none. It does detail out again for the reader the major programs that we identified and tested as major programs, and those are the 2 that I referenced, the first 2 on the prior page. The threshold of 750, and then on this one, did the auditee qualify as low risk? It is no for this audit, but this is your second successful timely completion. So next year, that will be yes. And that will reduce some of the sample sizes that we do on control and compliance testing for next year's audit. And then sections 2, 3, and 4 there, if we had any financial statement findings, award findings, or prior findings, they would all be detailed and disclosed in those sections, but there are none. And then the last page are the 3 standard notes that are required, just for basis of presentation.
Mhm.
Any questions on that or anything else?
I'm just out of curiosity, so auditing a single audit. What are the CPA firm, what are the requirements that a CPA firm has to meet? What are the thresholds we all have to meet? So the government says, okay, I accept that you are who you are and you have the knowledge and skills and experience to do a single audit. And is there kind of a vetting, if you will, by the government?
The training and continuing education is above and beyond what is required of a CPA in practice for a FASB non-governmental, non-GASB
Mhm.
financial statement audit. So we follow the yellow book, which at this point is still the 2018 version. They update it every few years. It was updated in February 2024. So that new yellow book and those standards will change. I believe their effective date is 12/15/25. Everything needs to be implemented. The biggest changes that I'm aware of right now are in quality management, quality control, and peer review processes. So I'm just starting the process of evaluation of that 2024 yellow book and what changes it means for firms. From a peer review perspective, we're, as an auditing firm, required to go through peer review every 3 years. But single audits are a must select for peer review purposes. So they must select our single audits every year, every 3 years of our peer review process to be inspected and tested to make sure that the quality is there. We are also members of the AICPA. They have a government audit quality center that we attest to their membership requirements and their quality standards to make sure that we have quality control processes, policies, and procedures in place on the oversight of these audits. And then the CPE alone, each of our team members are required to have 80 hours every 2 years of Yellow Book governmental accounting and audit. It exceeds what we need as a licensure for our CPA licenses, but it's necessary for these types of compliance audits.
So there are watchers watching the watchers.
They were watching, yep, multiple layers,
That's right.
multiple layers. So not all firms do these audits. And we have seen over the last 2 years, a number of our normal competitors in the marketplace have backed out of single audits just because of the additional cost, the time, the complexity, the oversight. And if it's not something that you have a team trained and developed to do annually, it's a big risk for a firm to be dabbling in single audits when there's a lot of oversight and complexities to them. So.
Okay.
But thank you for allowing us to be of service. If
Thank
you
you.
have any
Thank you.
questions, please let us know. We are at your service year round. If you have concerns or issues that you would like to bring to our attention, we're happy to explore them. Same for management. It's a pleasure working with them. But if you have any questions, we're always here for you.
Thank
Thank
you.
you.
Thank you.
Thank you, Sally, and your team.
Yeah,
Thank you.
Good job.
Very-
I'm gonna go back and read the capper for the after.
I like the CAFA better. It's easier.
Yeah, yeah.
Akper.
There is also, just so you know, in your packet, the,
The findings.
and our response to them. We agreed to
Yeah.
them and they've both been corrected. So just that, you know, we did address it also in the packet.
Great.
And yes, please read it. And if you find we have one more week, if we have any other adjustments to
Mhm.
it before the board meeting. So,
Every year, the password length requirements get bigger and bigger.
Well,
Yeah.
I know.
at IBM, it's 16.
I think,
And you have to change it every quarter. Don't
Yeah.
listen to that. Don't listen to that.
16.
16 every quarter.
Okay.
So the audit committee's done for the year, right?
Yeah. How about that? Sure Sally and her
I
team are
mean,
happy.
I mean, we enjoy these meetings,
Yes.
but
Yeah, no, it's always very thorough and very well
Yeah,
done
yeah.
and presented very well. So we appreciate that. helps our governance, so that's great.
And
Our
thanks for going into the peer review. I had forgotten about that. So
Yeah.
yeah, you might have mentioned it a couple years ago, but it's good to remember that you have to go through peer review for these reports.
Okay. Anything else?
No.
No?
Yep.
Motion.
Next meeting,
Next
it's on the
meeting,
agenda. When's the next meeting? January?
January, February,
Roughly.
roughly January, February. You know? Yeah. Have to worry about it for a while. Hopefully I'll still be here. The
That's
term
right.
ends in December.
Oh, it does.
Yeah. I'm gonna
If
try
you
to
need a
read it.
recommendation to be reappointed, let me know.
Okay, yeah, I do. Yeah, you never know.
You never know.
You never know. Yeah. Okay, then a motion to adjourn.
So move to adjourn?
Second.
All in favor?
All
Aye.
right.
Okay, we are adjourned at 9:01. Yes.
Thank you again very much.